Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer. I'm Operations Manager for Wickham Financial Group. And I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Thank you, Jeremy. Thanks for our listeners jumping on the call. We had the S&P and the Nasdaq Composite both rise nearly 1% to close out the week at a record level. Now, we had the Russell 2000 jumping about 3%, and international stocks kind of followed suit. Not quite 3, but had a positive week. So we did see the 7 of the 11 S&P sectors all in the positive territory, led by healthcare, communications, consumer discretionary. Now, if we look at the global trade and tariff, we had U.S. and China tariff truce that was extended. That was boosting some, probably leading to some investor confidence this past week. From a commodity standpoint, we saw crude oil prices were pretty steady, despite OPEC's raising 2026 demand forecast and lowering U.S. growth estimates. Now, gold, that fell 2% amid uncertainties over potential U.S. tariffs on gold bars. We look over at cryptocurrency. That was really led by Ethereum. That was up 18% midweek, came down, closed the week up, still 8%. If we look at interest rates and inflation, the CPI report came out, and that showed some modest consumer price increases boosted by some rate cut expectations. The PPI report revealed about 0.1%, or excuse me, 0.9% month-over-month jump due to some higher services and food prices. Now, the 2-year Treasury yields, they dropped to about 3.66%, and then ended the week by to about 3.76%. And the odds of a September rate cut, because I think a lot are expecting the Fed to come in and start cutting rates in September, that was right at 100% at one point in the week, and that ended by around 85% in terms of odds by the end of the week. If we look at consumer sentiment and spending, we saw the U.S. consumer dropping their sentiment to about 58.6 from 62. So getting a little bit more concerned. We saw the 1-year inflation outlook rise to about 4.9% from 4.5. In the long run inflation outlook, that rose to about 3.9 from 3.4%. Wrapping up with retail sales, that grew about 0.5% last month. June was revised up 0.9%. Now, if we look at the international markets, we saw China's July industrial production and retail sales miss their forecast. Japan's Q2 GDP, that grew about 1%, annualized 0.3% quarter over quarter. And Australia's central bank, they cut rates to 3.6%, downgrading some economic outlook, some of the growth over there. The Eurozone Q2 GDP, that grew about 0.1%. If we look at 0.1%, and we look at UK's Q2 GDP, that rose about 0.3%, down from 0.7% in Q1. Now, this week, listen, it's about geopolitics, it's about central banks, it's about some economic numbers, and a little bit of retail sales earnings or retail earnings coming out. But we had President Trump met with Putin. They discussed some potential ceasefire over the weekend, led into the first part of this week, where we had Ukraine's President Zelensky come and visit the White House. How these discussions are all going to end up, we'll just have to see. But that seemed to be, for good reason, a good talk of the tape. If we look at the central bank and the Fed activity, Kansas City Fed's Jackson Hole Symposium begins on Thursday with some speak coming out from Fed Chairman Powell. What is the market looking for? I think the market wants confirmation that the Fed's going to acknowledge, or Chairman Powell is going to acknowledge some rate cuts. I don't know if we're going to get that. I do want to be mindful that the market may be disappointed that he doesn't just scream that out, but maybe hints towards. And if it's a hint and the market feels okay with that, that might be all they need. We'll kind of wrap up the week with some economic data and releases with the flash PMI data that's coming for August. It's expected this week. It'll be the first look at tariffs impact on any major developed economies, and then a look at the housing data. That'll be for home building permits, existing home sales. We'll look at some corporate earnings. So we did have Berkshire Hathaway come out and really disclose some new holdings. And they came in and bought some U.S. home builders stocks. They also took a position in United Healthcare. So that helped boost the Dow. The United Healthcare is in the Dow, so they helped move that indices with a vote of confidence over there. And then we're kind of wrapping up earnings season right now with some retail. And that's going to be Walmart, Target. We just had Lowe's and Home Depot just come out. Jeremy?
Gotcha, Graham. Well, we always appreciate the information and expertise. And thank you to our listeners that check in with us every single week. We always appreciate it. We look forward to seeing y'all next week.
Take care.